The S&P 500 Index, whose full name is Standard & Poor's 500 Index, was launched by Standard & Poor's on March 4, 1957. The S&P 500 Index, the Dow Jones Index and the Nasdaq Index are among the three major U.S. indexes. They are a good measure of the U.S. large-cap stock market. The constituent stocks account for approximately 80% of the total U.S. stock market capitalization. The constituent stocks of the S&P 500 Index include 500 large U.S.-listed companies, most of which are traded on the two major U.S. exchanges, including the New York Stock Exchange and Nasdaq. The S&P 500 Index has the following two characteristics. 1. Risks are more diversified. The S&P 500 Index has more constituent stocks and richer industries, covering industries such as technology, finance, and information. Compared with the Dow Jones Industrial Index, which contains only 30 listed companies, the S&P 500 Index is more representative of the market. For investors, the risk is also more diversified. In addition, compared to the Dow Jones Industrial Index, which uses stock price weighting, the S&P 500 Index is calculated based on market capitalization, which can better reflect the importance of the constituent stocks in the market. In addition, the constituent stocks selected for the S&P 500 Index also have strict regulations, mainly in terms of market value and issuance time. These mechanisms are automatically screened for us by index companies. Therefore, most of the constituent stocks that can be classified in the S&P 500 are companies with good quality and good financial situation. 2. The long-term rate of return is steady and upward, and the dividend is stable. The S&P 500 Index has an annualized return rate of 8.2% over the past 20 years, which can be said to be one of the best stable investment targets in the investment market. In addition, the U.S. stock market also has the characteristics of long bull market and short bear market, so it is very suitable to include the investment targets of the S&P 500 Index into the investment list. The S&P 500 Index contains 500 large-scale listed companies in the United States. Basically, well-known companies in the market include Google, Facebook, Apple, Microsoft, Amazon, Berkshire, etc., are one of the constituent stocks. These companies are highly fragmented and market representative, and the U.S. market is one of the most mature financial markets. It can be said that the S&P 500 Index is the index of choice for investing in the U.S. market. The index itself is not tradable. If you want to invest in the S&P 500 Index, you usually invest in constituent stocks, ETF, and index futures. The S&P 500 Index has the characteristics of steady and long-term growth in return. In addition to the strict screening mechanism for the selection of index stocks, the S&P 500 Index's constituent stocks and their industries are also highly dispersed. However, although the S&P 500 Index accounts for nearly 80% of the total market capitalization of the U.S. stock market, it cannot be said that it is a perfect index for the following reasons. 1. Most hold large stocks. It is still not necessarily a perfect representation of the U.S. stock market, and it only contains large stocks, but in fact, the most explosive investment is often small and medium-sized stocks. How to operate depends on the investor's risk-reward attributes. 2. Small and medium stocks cannot be selected, but it may not be a bad thing. According to statistics, small and medium stocks in the United States have higher and lower returns than large stocks, which is difficult to grasp. Therefore, If you want to achieve steady growth, the S&P 500 investment target is a more appropriate choice.